And then I did it again on Thursday just to kind of like let them know it's not just throwing darts and trying to see what sticks. Okay. There's several things here, even at all time highs. Thursdays tend to create a intermediate term high in and of itself by itself through uh, the application of weekly profiles. So even if we close high on the week today, it doesn't matter because you can take something in Thursday's afternoon during the lunch hour into like the PM session. Usually it creates an important high. It's tradable. Okay. And when you factor that also with the fact that we're at all time highs and it's just trading above Wednesday's high here after taking another buy side liquidity pool, which is the first hour's dealing range of trading for Thursday. All this mess down in here was layered sell side liquidity. So it was very, very probable for it to go down there and clean up that. Buy side here, we traded above it. And when it's doing these types of things, when it's bearish, I love seeing it's a very classic pattern. It's not mine. I didn't invent it. Okay. But there are times where it works really, really well. And it's the three drives pattern. Okay. In the Street Smarts books, they have a cute little name for it. They call it the three Indians pattern, which, I like the three drives pattern. This sounds more Fast and the Furious, manly. The three Indians pattern just sounds, I don't know how it doesn't fit my MO. Okay. So we're just going to go with the three drives pattern, which is the classic term for it. So the high here being taken. So we end up creating one high, two high, and three high. And then, well, when you see these types of things, when you see a high above buy side liquidity, when it's extremely overbought, and I don't need an indicator to tell me that, and neither do you, the likelihood of drawing down into this area here, it builds the likelihood of them staging in short positions. Who's they? Smart money. So what they do is they create a short-term high, start to drop it a little bit, and everybody is always trying to catch a top when they're a retail trader. Okay, and there's lots of breakout artists that want to buy the breakout. Okay, so no matter what you're trying to do, whether they're going short or if they're trying to capture a run higher,
It is hard to earn money.
there's lots of breakout artists that want to buy the breakout. Okay, so no matter what you're trying to do, whether they're going short or if they're trying to capture a run higher, they're going to have a buy stop there to capture a breakout. Think about like those guys that trade the first hour's range and they look at this as an opening range breakout. Okay, they're going to get tripped up with this. That's why it works. So what I'm doing is I'm layering previous day's high with that and using a draw on liquidity down here. So I'm waiting to be the profiteer on watching everybody else hang themselves, chasing something that looks like a breakout. Bull flag traders, okay? The real easy guys that, all I got to do is trade a bull flag. Okay. Well, bull flag, bull flag, bullshit. Okay. And it goes lower. So what I was showing you is I had already had the 1, 2, 3 expected and explaining how smart money would be shorting every time one of these short term highs were taken. And when we traded above Wednesday's high, daily high, previous daily high, this is a wonderful area to anticipate a breakdown. So there's several things in here that you can do. You can toss a hook in the water and see if you can catch a intermediate term or long term high. Now, take the all time high out of the equation. If this was a bear market and we had been retracing 3 or 4 days in a bear market, and I saw this type of structure here, I'd be selling short the same way you watch me execute, both on Wednesday and Thursday. So it's not that, oh, it's BS. There's no confirmation. You don't know what confirmation is if you lead those comments, young man. So what I'm showing you here is the context. It's the reason why. Okay. I'm not trying to encourage you as inexperienced traders or casual viewers to go out here and try to trade short all-time highs. But it was me just answering a couple jawboners that were trying to say that this stuff doesn't work. You shouldn't listen to me. I can't trade. They can trade better than me. Let's go one on one. Okay. Well, here's 2 days worth. You catch up to what I just did in the last 2 days, and when you get past that, then we'll continue on. But for now, just take the old man's advice and say, look at the context as of what I was showing you. Okay. The fact that we've started trading above Wednesday's high, I'm looking for fair value gaps right before this high is taken out. So what is that going to be here? What's that going to be? It's going to be something that causes bearishness. And I put this here to contrast the colors over here because at this point, it should be viewed, if it was going to be bullish, it would be treated as a discounted ready to go higher, but not if it's above Wednesday's high. Not if it's above Wednesday's high, and they left all of this obvious mess down here where they're going to come back for that. Okay, so in Steve Nielsen's group that subscribe to his candlestick theory stuff, whenever they see wicks like this, they view that as something bullish, some measure of accumulation. I see that as engineering liquidity. It's going to come back for that. Okay, why? Because retail sees that as something that is quote unquote bullish, therefore support, therefore trustworthy. Stop losses are protected underneath all that. And I look at that and I cannibalize that. That's what I teach all of you. We look for people to trade with that logic where they feel that a specific location in price action is a safe place. Okay. And just like killer whales and orcas, they think those harp seals are sitting up on those little flats of ice in the water. They think they're safe from the killer whale until the killer whale says to his buddy, he says, listen, I'm going to run real fast towards that ice and you be on the other side because I'm going to duck underneath it real quick and it's going to slide down right into the water. Don't eat it all real quick. Save me some. And they do a coordinated strike. That's what I'm teaching you. I'm teaching you all to be orcas. Okay. You're all killer whales in the making. But you have to see how it's done to appreciate it. Just watching this and assuming, oh, it's 15 different attempts and you finally got it. If you think that's what I was doing, then you get to use 50 chances and do what I do. Okay. I'm not bragging. I'm just saying it's an old hat excuse. If you think it's easy to do and you can do it, then start doing it. Call the low of the day and then wait for the high to form and record the entire thing. And then let your target that you call for the day get hit with your target being hit in trade. It's very simple. Like you said, it's easy. So when I see those types of things, I'm neither impressed nor bothered by it, but it is entertainment. So because I saw comments sent to me on TradingView and on email saying that you got lucky with that. Well, I did it again yesterday. Okay. So it's not a matter of luck, it's a matter of conceptual ideas being applied to charts at the right time. This up close candle, this bullish fair value gap, when it's in a buy side liquidity pool, if I'm expecting it to drop and go lower and attack all this stuff as a first stage draw and ultimately looking for 805, which is what I tweeted yesterday, right in here. That's why these are here. Also, to upset the guys that want to pretend that they did these trades. I'm going to start doing these types of things. I'm going to litter my chart up with things I posted on X in advance. So that way, not only is it thumbing my nose at the people say it was cherry picked, but it's also like little tiny built-in watermarks. Okay, because you can't pretend to be me on another social media platform when my handle for X is right here, and I don't post anything on Instagram. I don't post anything on TikTok, and I don't have any other social media. So this is where it's all at. So anyway, this would change, and I was drawing the line here for consequent encroachment midpoint of this gap. That changes to inversion fair value gap. Okay, and then working lower. Look at the bodies. It stayed after touching the midpoint here. The body stayed in the lower half. So right there, that's confirmation. Without confirmation, this is BS. Everything I teach in order flow, it's showing it here. The body showed the consequent encroachment respect here, up to consequent encroachment of that, then breaks down. We get a little tiny little mohawk, but where's the body at? In lower half. Can't even touch consequent encroachment and leaves it. Okay. Then we drop down into this one. Trades down here. We have a little bit of this disinterest getting back to the midpoint here. The bodies are staying outside of it by the low. We trade down, lower, lower. This one in here, I would have liked to seen it behave a little bit better in here. It didn't do it. So I realized that I was going to have to weather a deeper retracement. That's why you see the stop loss stay really, really high up, because these deep retracements before the nice big run happens, that's been like the flavor of the month for a while now. So I'm kind of like protecting my positions when I take them to not allow that wild wick to come back up here and clear anything that's been trailed, and then it drops, or then it goes higher, whatever. So this buy center bounce sell side inefficiency changes its first utilization from that of a bullish PD array if it trades down to it. I'm not bullish. Remember, this post here was posted at 7:45 a.m. Eastern time yesterday morning. I'm talking about how it's did some mess in Asia the night before, so I think they're going to revisit that. So what I did was I drew an area where I thought that it'd be easy to get to in terms of sell side liquidity, and I don't need the best case scenario, which is the fair value gap or inversion fair value gap there. Okay, so if we look at it from